Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at energy fuels.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And before we jump into the actual chart today, I just want to mention a really helpful tool if you're reading those charts. If you're looking for a much cleaner way to visualize price action, you can check out VIP Algos through the link down in the description.
Right.
It's essentially this TradingView indicator suite, and it's designed to give you visual buy and sell chart alerts, trend direction tools, support and resistance zones, and even areas to help plan your take profits and stop losses.
Which is super useful across basically all markets, right? Like stocks, Forex, crypto, indices, all of it.
Exactly. But, and we need to be incredibly clear here, VIP Algos is strictly an educational tool. It is not financial advice, right? It will never place trades for you, and it absolutely does not guarantee any kind of results or profits.
Yeah, trading always involves risk, so you always have to do your own research and, manage your capital responsibly. And just a heads up, that link in the description is an affiliate link. It just means we might earn a commission if you use it, but it's at absolutely no extra cost to you.
Okay, so let's get right into the ticker that is just, completely dominating the pre-market chatter today.
Oh, yeah. It is the morning of June 18th, 2026, and if you pulled up your terminal this morning, you probably did a double take.
Definitely. We are looking at a 16% surge for energy fuels.
Yeah, pushing it up to $17.79 before the bell even rings.
Right, and when a stock gaps up on that kind of heavy volume, some institutional tectonic plates have just shifted.
Exactly. And the driver behind this specific move today is honestly unprecedented.
It really is. The U.S. Office of Strategic Capital, the OSC, they just handed down a conditional $725 million 20-year loan commitment.
Which is just massive, $750 million. This isn't just, some standard commercial bank extending a credit line.
No, not at all. The OSC is a specialized wing of the Department of Defense.
Right.
Their whole mandate is to identify and fund tech that is absolutely critical to national security, but maybe, struggles to get traditional private sector funding.
Yeah, so by stepping in with a 20-year commitment, the government is making a huge statement.
They are. They're not just backing a business. They are actively trying to solve a severe domestic supply chain bottleneck.
And they've clearly picked their horse here, which raises the big question for you, the investor, looking at this crazy gap up today.
Right. Is this just a, flash-in-the-pan headline spike?
Exactly.
Right.
Are early buyers just going to dump their shares by noon? Or are we really seeing energy fuels fundamentally transition from a speculative mining play into a subsidized cornerstone of U.S. defense resilience?
Well, I really think it's the latter. The U.S. government clearly views domestic processing of these materials as an urgent vulnerability.
You don't hand out a 20-year loan unless you believe they are foundational. All right, let's move into the wealth building context.
So when you look at a stock like this for long-term portfolio growth, you kind of have to zoom out from the daily ticker tape, right?
Yeah, it's not just about, pulling radioactive rocks out of the ground anymore.
Exactly. We're looking at a huge convergence here. It's critical mineral scarcity, reshoring supply chains away from adversarial nations, and obviously national security.
Right, but underneath all that defense talk, there's a secondary engine, right? The AI connection.
Yes, the AI revolution is completely transforming the demand side. The global uranium market is facing the structural squeeze.
Because the mobile inventory, all that excess uranium sitting in warehouses, it's just vanishing.
Right, it's colliding with this surging demand for small modular reactors, or SMRs.
And those SMRs are increasingly needed to power the massive data centers running AI.
Exactly. AI hardware is incredibly power hungry. You need relentless 247 baseload power, and wind and solar just can't bridge multi-day gaps.
But let me push back a little here, right? Just playing devil's advocate.
Sure, go ahead.
In every gold rush, the people making the real money are selling the picks and shovels. SMRs are the picks and shovels of AI. But is Energy Fuels actually producing yet? Or are they just riding this AI hype wave?
That's a fair question. They are producing, but they are in a transitional phase. This fits a very specific target investor profile.
Okay, so like a long-term growth and high-reward profile.
Yes, exactly. Ideal for investors looking beyond short-term volatility to these multi-year infrastructure shifts. Now let's look at the fundamentals.
Let's do it. What's the actual business mode here?
Their core competitive advantage is ownership of the White Mesa Mill.
Which is a massive deal because it's the only conventional uranium mill in the U.S., right?
Exactly. It is a massive infrastructure moat, completely protected by insanely high regulatory and permitting hurdles.
Yeah, nobody's building a new one anytime soon.
Yeah.
And haven't they produced like 2/3 of all U.S. uranium since 2017?
They have. And the numbers back it up. Current revenue is sitting right around $65.9 million.
And the balance sheet is surprisingly robust. Zero long-term debt.
Right. Zero long-term debt
Yeah.
and a current ratio above 30, which is fantastic liquidity.
Yeah, and profit margins are getting a nice boost from those low processing costs at the mill. What, $9 to $12 per pound of U3O8?
Yeah, $9 to $12. And the mining and transport costs at Pinyon Plain are tracking around $23 to $30 per pound.
Okay, but here's the ugly side of the ledger. They have deeply negative margins right now.
Well,
I mean, the 2026 estimate is a loss of 14 cents per share. Are they just burning way too much cash?
it looks like cash burn, but you have to understand they are in a heavy build-out phase to ramp up rare earth capabilities.
So that's where the OSC financing comes in.
Exactly. That conditional $725 million gives them massive capital flexibility to expand without immediately diluting existing shareholders.
Oh, right. No massive share offerings needed.
Exactly. And because of that, by 2027, the earnings estimate actually pivots to a 9-cent per share profit.
Which is a huge turnaround.
Yep.
That brings us to the catalyst timeline.
And there's a lot happening. First up, Q2 2026 earnings are fast approaching.
Right, and the expectation there is that they'll confirm they hit their 1.6 million pounds of U3O8 target in just 6 months.
Which means achieving their full-year guidance range early. Always a great sign. Then, in July 2026, the rare earth expansion kicks in.
Right. They plan to modify the White Mesa mill to support commercial quantities of separated NdPr and heavy rare earth elements.
Yeah, they literally just completed a commercial run of on-spec NdPr oxide that can power 1 million EVs a year.
Wow.
And that scales to 6 million by 2027.
That's incredible. But what about these speculative or unconfirmed events?
Well, there's the pending acquisition of Australian Strategic Materials, or ASM.
Right, which would give them direct metallization capabilities in South Korea.
Exactly, building out that whole allied supply chain. Plus, the potential restart of the Nichols Ranch ISR facility in the second half of 2026.
But that depends on uranium contracts hitting that $90 plus level, right?
Yeah, it has to be economically viable to turn the pumps back on.
Well, quick question on those catalysts, specifically the loan agreements. Is the finalization of that $725 million loan already fully priced into the market?
It's a risk for sure.
Right, because we have to warn people about that. Buy the rumor, sell the news behavior. It might dump once the ink is actually dry.
Which is why watching the technicals is key. Now let's pivot to the chart.
Good call.
The price action is showing a structural breakout. Over the trailing year, Energy Fuels gained 206.1%.
Which completely crushes the industry growth of 73.9%.
Exactly. And peers like MP Materials only saw 61.4%, USA Rare Earth at 103%.
So the momentum is just undeniable right now.
Especially with this recent 16% surge to $17.79. It's a high-volume gap up.
Though broader uranium stocks also surged 11% in the same week, so a rising tide lifts all boats.
True, but the chart structure here really indicates a psychological shift from a speculative hold to bullish accumulation.
Right. They're closing the gap on those 52-week highs.
Yeah, institutions are stepping in.
But just to urge some restraint here, remember that charts show probabilities, not guarantees.
Absolutely.
There's definitely potential for short-term volatility after such a massive gap up. So if you're a trader looking for a cleaner workflow on that, tools like VIP Algos can help, but always manage your risk.
Yeah, couldn't agree more.
So what does market sentiment look like?
Honestly, the overarching mood is strongly bullish. You've got headlines everywhere like Pentagon bets $725 million on energy fuels.
Yeah, that OSC commitment mobilizes over $11 billion in combined public and private capital across the sector.
Right, it's massive institutional validation.
And you see a heavy spike in retail investor search traffic following that government news too.
Oh, definitely. Retail's all over this.
But here's the disconnect. Despite the massive hype and all this institutional validation, analysts are keeping Azax ranked number 3, which is a hold on the stock.
Yeah, they are.
So why are analysts playing it so safe while retail is rushing in?
Because analysts are looking at the downside. Now let's talk about the risks.
Okay, and the big one is valuation risk.
Right. Energy Fuels is trading at a severely stretched forward 12-month price-to-sales multiple of 22.8 year.
Wow. Compare that to the industry average of just 4.99.
Exactly. The market is pricing in this absolute blue sky scenario where literally everything goes perfectly.
Which brings up execution risk,
Yeah.
right? Pivoting from pure uranium to a dual uranium and rare earth processor is incredibly complex.
It really is. If they hit any bottlenecks modifying White Mesa or integrating that potential ASM acquisition.
That 22.80 multiple will just collapse.
That absolutely will. And let's not forget profitability. The company is unprofitable right now.
Yeah, the whole thesis relies on hitting that 2027 profitability target. Any delays could burn right through their liquidity buffer.
Exactly. You are betting on flawless execution over the next 2 years.
So with everything on the table, what's the final verdict?
Well, weighing the moat against the risks, the bullish score comes out to an 8 out of 10.
Okay,
And the long-term stance from an analytical perspective points to it being a multi-year hold.
a multi-year hold, right?
Yeah. The main upside driver is its position as the premier domestic critical minerals processor, which is now deeply de-risked by government backing.
And the main risk remains the actual execution of Phase 1 and 2 rare earth modifications through 2027 and 2028.
Exactly. It all comes down to execution.
Just to clarify, this profile really suits long-term thesis-driven investors.
Oh, 100%.
It is very dangerous for short-term traders who are just looking for immediate margin safety. And as always, this analysis is strictly educational, not financial advice.
Right. Please manage your own risk.
And if you are navigating these volatile setups, be sure to check out VIP Algos through the link down in the description. It's an educational TradingView indicator suite for cleaner chart reading with visual alerts and TPSL planning areas. Again, it is not financial advice. Trading involves risk, and that is an affiliate link, so we may earn a commission.
And if this episode helped you, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua episode.